Hi. Now that we've covered technical strategies, fundamentals, risk management, let's have a little fun. Let's put all these things together and see how they work in an actual trade. Now, if you take a look at this chart with me, I think it's fairly obvious that we're in a downtrend. Okay? Remember, obvious is better. If you have to look at a chart too long to determine if it's in a trend, it's probably not that good. In this case, I'd have to say that the currency pair is moving in a very sustained downtrend. Well, we know what to do. We're going to follow that trend. So, in this case, it's the US dollar Canadian dollar pair. It's in a downtrend on the daily chart. What are we going to do? You know, we're going to look for opportunities to sell short. And we're going to reject opportunities to go long. For example, we'll look for a rally up to a prior point of resistance, or perhaps a sell signal from an oscillator such as RSI. Then, we're going to switch to an hourly chart and find that entry point. Now, in this case, you're going to see that there is a resistance area around 118. We're also going to see that there's a potential breakout, right? You can see the price looks like it might be breaking above 118. So quick, what do? It's breaking out, right? It's going up. What are you going to do? If you said go long, you haven't been paying attention. We saw the downtrend on that first chart. That means we can only sell short. So guess what? If this thing's going up, it's going up without me, because I'm not going long. Okay? Remember, we try to resist the temptation to trade against the trend. You saw how tempting that was. It looked good, didn't it? Resist that temptation. Instead, I want you to position yourself so that if the breakout fails and the price falls back below 118, then we're going to sell short, and now we'll be trading with the trend. The trend is going down on the daily chart. We want to sell short on the hourly chart. So, we're going to place an entry order for 3 lots at 117.85. That way, if the price breaks 118 and keeps going up, there's no trade for us. And by the way, do I care if it's going up without me? Absolutely not. I am not the least bit worried about the trades I don't enter. I'm very concerned with the trades that I do enter. So if it goes up, as I said, it's going up without me. But if it falls back down, I'll be selling short beneath the breakout point of 118. Let's place an entry order at 117.85. Okay, so what's going to happen? It turns out that the price does fall back below resistance, and we sell short 3 lots at 117.85. First thing we got to do, right? We got to place that stop. Since we're selling short under resistance, the stop should be above resistance. Let's place a stop at 118.25. So when you look at the chart, 117.85 is in green, that's our entry point. 118.25 in red, that's our stop. 118 even is that general area of resistance. Since we're selling 3 lots, we need 3 exits. And how are we going to determine those exits? Well, we're going to use risk management rules and prior levels of support to find those exits. And then we're going to tweak it. We're going to make minor adjustments to those exits to increase our likelihood of success. On this chart in black, I've chosen 3 exits. Consider that first exit at 117.45. If you take a look at the amount of risk on this trade, the risk is the difference between the entry, 117.85, and the stop, 118.25. The risk is 40 pips. So, let's say that when I'm profitable by 40 pips, I'll sell 1 lot, I'll move the stop to break even. That's my first exit. My second exit, 117, is based on the fact that it's a large round number and there's considerable resistance. You can see it on the chart that that area, and remember, it's not a specific price point, but that area of 117, you can see that several times the price has come down to that area and bounced up. So I'll use that as a secondary exit. The third exit is 116.50. If you look toward the far left of the chart, you can see that that area acted as support previously. So we have our three exits. Now let's tweak them just a little bit. Notice that I've moved them all up just a tiny bit. Instead of 117.45, I've moved that first exit up 5 pips to 117.50 because 117.50 is a round number and I might hit some support there. So to err on the side of caution, exit 5 pips higher. What about 117? Well, we said resistance is 118. If support is 117, that's 100 pips, why don't I move my second exit 10% higher? 10% of 100 pips is 10 pips. I'll raise the exit to 117.10. Also, 116.50 is a support level. The difference between 118 resistance and 116.50 is 150 pips. Why don't I raise that exit by 10% or 15 pips? My third exit will be 116.65. Now, by raising these exits slightly, I've really increased my chances of success. I'll make a little bit less if I'm successful, but that's okay. I'm not going to try to squeeze every last pip out of this trade. I'm much more concerned with exiting successfully. And if I am able to do that, it will turn out to be a pretty good trade because there are substantial gains on the table. Now it begins. And by the way, these times that you see on the chart, those are New York time. Apologize to my friends overseas. I do trade New York time. So we have our first entry. The price hits our entry point at 1 p.m. at 117.85, and we are short 3 lots with a stop at 118.25. And almost immediately, nothing happens. The price goes sideways. We're slightly profitable, slightly negative. We go back and forth and into the next day. The next day is a Wednesday. And on Wednesday mornings in the U.S., the Department of Energy releases oil inventories. Since I'm trading the Canadian dollar, and the Canadian dollar is affected by the price of oil, that inventory report can create a lot of volatility in this currency pair. In this case, it drives the exchange rate up almost to the point of hitting my stop, but not quite. As luck would have it, the price then turns and goes in the other direction and hits exit 1 several hours later. Exit 1 at 117.50 is achieved that afternoon. So what did I say that I'm going to do when I've achieved exit 1? I'm going to lower the stop to the break-even point. Consider now my worst-case scenario. Lot number 1 is profitable by 35 pips. That's in the bank. Lots 2 and 3, the worst-case scenario is break-even. My stop is at the break-even point. I can't lose on those 2. So the worst-case scenario for me is a small gain. That's a good situation to be in. Let's continue to play this out. That vertical line on the chart, you can see that we're moving to the next day. We're now going into Thursday, and on Thursday, in the morning here in the U.S., the Gross Domestic Product Report is released at 8:30 a.m. Eastern Time. And the reaction to the report is that the dollar strengthens. And within a half hour, my stop is being threatened once again. But once again, we see a reversal. And later that morning, exit number 2 is achieved. So, I now have in the bank 35 pips profit from lot number 1. I have 75 pips profit from lot number 2. And I still have 1 lot open. And now that I've achieved my second exit, I'm going to lower my stop again. You can see the red line has come down beneath the entry point of 117.85. Brought my stop down to the former location of exit number 1 at 117.50. Now consider the worst case scenario. 35 pips profit on lot number 1, that's in the bank. 75 pips profit on lot number 2. That's already been achieved. Lot number 3, the worst thing that can happen is a 35 pip profit. Again, not a bad situation to be in. As we go into Friday, the next day, as luck would have it, the price collapses and exit number 3 is hit at 116.65. That wasn't rocket science. All we were doing was trading with the trend. That trend has a tendency to reassert itself. That's exactly what happened. And in this case, we were fortunate enough to gain 35 pips on lot number 1, 75 pips on lot number 2, and 120 pips on lot number 3. So, all that we did, we looked to the long-term trend for our direction, then we followed a plan. We created a plan using entries, exits, and stops. Followed that plan to fruition. And as you'll see, it's not going to work all the time, but if we follow a good plan on a consistent basis, generally speaking, you're on your way to becoming a successful trader.